Index podcast is brought to you by our staking partner, Marinade Finance. Their latest release, Marinade Select, offers a smarter way to stake, featuring a curated set of high-performing mid-size validators handpicked for yield, professionalism, and their role in making Solana faster and more resilient. Learn more and start staking at marinade.finance. Hey everybody, welcome to the Index. I'm your host, Alex Kehaya, and today I'm excited to be joined by Steve Ptucha. Is that how you say that?
Yep, you got it.
Head of growth at Solana Labs and founder of Solana Labs, Ranga, the team building the scalable Solana dollar, a synthetic stablecoin with native yield. Steve and Ranga, thanks for being on the show.
I'm glad to be here.
Yeah, same.
So really excited to talk to you guys about what you guys are building and your stablecoin. I think it's really good timing, especially with what's happening with some of these digital asset treasury companies and just generally speaking, like what's happening on Solana. But before I do that, I'd love to start maybe with Steve. We'll start with you. You know, where I start with most of my guests was like, why are you here? What gets you out of bed in the morning to be here and working on Solomon and just generally like building a stablecoin in crypto?
Yeah, sure. So I started my career in financial services with credit cards. It wasn't exactly what I liked. I sort of genuinely enjoyed it, but there was always something I was craving more. And I first discovered crypto back in 2013. I was actually mining Dogecoin on my laptop in college. Didn't really get the whole thing, just thought it was cool, and didn't really put everything together until about 2017, the whole ICO craze. Really got involved with investing, looking at Bitcoin, Ethereum, and during that whole crash, I decided to stick around and really learn about the power of decentralization, how blockchains worked, and then really got into the weeds with smart contract programming and Ethereum. And then in 2021, I found a role with Venmo to lead their crypto team. So I was leading different initiatives from a product perspective, from transferring crypto on Venmo to working with PayPal to launch PYUSD. I did some of the other things like an ENS integration. So it was a great experience and a great bridge, for lack of a better word, into crypto. But when I found this opportunity with Solomon, I figured it was time to take that next step and be fully immersed in Web3 and be full crypto. And yeah, I'm happy to be here and help pioneering the future of finance.
Very cool. What about you, Ranga?
I love building. I've been a builder since I was a kid. I got into, so prior to crypto and sort of the real world before crypto, I was an electrical engineer. I actually spent quite a bit of time working on the development of SIP, which is the Common Industrial Protocol. So that's basically the language that PLCs, robots, machinery talk in the industrial space. So basically any automation floor, like the language that robots are speaking in, we were developing that.
That's speaking to each other,
Exactly.
Communicating with other robots, like
Yeah.
sending messages back and forth. It's like a protocol.
Literally a protocol. Yeah.
Very interesting.
Yeah. So just had that sort of mindset about protocols and how things should communicate, et cetera. And then I discovered Ethereum in 2014, 15. Obviously, Bitcoin, dabbled a little bit in investing. But when I read the white paper, started thinking about smart contracts, and I was sort of instantly sold on this idea of like programmatically, ensuring things, right? Fast forward a few years, the last couple of years, I was building an NFT lending protocol, co-founded one pseudo-anonymously. And while we were doing that and thinking about what NFTs were and the infrastructure around it, and looking at sort of the meme space on Solana, we started to realize, okay, a lot of the promises that NFTs had was sort of being fulfilled by memes on Solana. And that got me thinking about the different phases of that sort of layer ones go through. And I could talk about that a little bit more later. But it made me realize, hey, look, there's like this incredible need for Solana to have its own native stablecoin. And especially one that taps into the meta of revenue sharing. Like that is the next step. And when I saw this opportunity, I said, we have to jump on it. We have to build something. And that was the birth of Solomon. And that's what's getting me up every day today. Oh, you're on mute, Alex.
Sorry, I muted myself because I'm typing. I'm
Oh.
looking up this tweet by Mert. I was saying it's really timely that you were talking about this revenue sharing thing with stable coins, because I just think it's generally like a really interesting idea. But he was tweeting yesterday that, digital asset treasury companies, which are a couple launching on Solana now that are going to be quite huge, right? Like multi-billion-dollar companies should have their own stable coin or use a stable coin that shares revenue with the DAT, and then that money is used to buy and potentially buy and stake or buy and burn SOL. And I think I thought that was a really, really interesting idea. And I'm trying to pull it up to see if I can find it.
Yeah, there was a bit of that with some of the proposals that were going out for Hyperliquid, and
right. That's where I think the idea.
Yeah, it was him. Yeah, there was quite a bit there. That totally makes sense.
Yeah,
when you were looking this up, can you just talk to me about like how that works? How does your stablecoin generate revenue?
Sure.
Or just start from the top, right? And then like how's that shared with people?
Yeah, so let me just kind of for those that are unfamiliar with basis trade stablecoins, like Athena. Athena is probably the biggest one out there. I think it has about 12 billion in TVL right now. So the core of it is pretty simple. What you're doing, let's say I have $100, and what I would do with that $100 is I would buy $50 that would be long, so in the spot position. So let's say I buy $50 worth of Solana, and then I would take the rest of the $50 and I would go to a perps market and I would open up a $50 short. So now when the position moves, right, whether it goes up or down, it's neutral in the sense that I would take just as much of a loss on one side as I would get a gain on the other side. So that's what's called a delta neutral. Now, where you earn capital or money off of that is, in most cases, the funding rate that's in these perps market is positive. So the longs are paying the shorts in order to open a short position. And those interest rates or those rates are between 5 to 10 to 15, or can go all the way up to 60, 70% or higher, depending on basically the demand. And so what you're doing is you're collecting that funding rate. So that's real capital that you're earning. And then you share that capital to anyone that's holding the stable coin. So that's basically sort of the A to Z in terms of, sort of in simple terms, how revenue is generated. And then that distribution is simply about, depending on the mechanic of, there it is. Yeah. The mechanic of whether you want to stake it or whether you force people to stake the stable coin in order to earn that yield, or you automatically stream it. There's multiple ways to share that revenue. I think if I can read that screen, what some of those proposals were going out to were more about the revenue that's generated by the stablecoin company themselves. Like, so the cut that they're sort of taking, they could potentially use that revenue to then go and buy the token or the asset or the chain in which they're conducting this. Or in Hyperliquid's case, it would be buying hype and burning it with that revenue. So it would create that positive feedback loop of where all of the positives are sort of contained within the chain, and the users benefit not just from or benefit in sort of all regards there.
Yeah, the thing that's cool, that's interesting about this idea, like one, I about what you guys are building is you're using this hedge strategy to generate revenue in a pretty sustainable way that's like risk managed. And that's kind of, I think that's pretty different. I haven't seen that before from a stablecoin provider. And then with this, you combine that with this DAT idea. He's talking about like a Solana-centric stablecoin that could be run by a DAT, or it could be done via partnership with digital asset treasury companies. And that's one goal is to stack as much SOL as possible, to acquire and stack SOL. And so anything and generate yield, right? So anything they can do to generate yield is going to be better for shareholders. And there are like lots of really interesting ways in DeFi to do that. And you just articulated one of them. And so I see this really interesting dynamic coming, and I'm showing the screen share here. I'll put the link in the notes here. I just see some really interesting opportunities for yield generation with stables, but not just stables, also with like equities and other real world assets that can be paired with stables and use some of these same strategies. Like your guy's idea with your stablecoin could be applied to almost any asset that gets created.
Exactly.
You could have a gold product that generates yield the same way. And just sort of like stack yield that way and give investors, like people who want to own those assets or hold them, a lot of different options. And these are all things that are not possible in public markets today. Like the NASDAQ doesn't offer.
It's not accessible to most people as sort of off the shelf package or product. And that's exactly so on our end, on the back end, right? That's where we're agnostic to what we can accommodate any type of asset. So once we get the real world assets plugged in, when we have equities and those types of things directly plugged in, we could also execute the strategy across any one of those equities or stocks or assets. Right now, we're looking at, or we're running the strategy on Bitcoin, Ethereum, and Solana. But depending on the risk appetite there, we could have that across any number of assets.
Really interesting. So, Steve, I have a question from you. For you. You're head of growth. How do we drive growth for a new stablecoin?
Well, you got to integrate with DeFi, with CeFi, and you got to have a strategy, and you got to have partners looking to be on board with that strategy. So, to break down the protocol first, Rango basically went into the mechanics of how we generate the yield. But as a user looking to partake in Solomon, you would go to our site, which I'm sure you can link in the show notes here. It's just SolomonLabs.org. And you go onto our site, connect your wallet, and with any SPL token, you can swap for USDv. Once you have USDv, it works the same way as any other stablecoin. It's pegged to $1. You can use that in DeFi. You can use it as a savings account. You can use it as liquidity. But in order to get this yield, you need to stake it. And you stake it with our protocol, and you receive sUSDv in return. This sUSDv is a second token. Think of it like a receipt. It's a receipt token that you have and still have custody of the funds in your wallet, but it's a value accrual token. Right now, we're offering about 20 to 21% yield with a little over 1.5 million TVL under our stealth launch, which is now public. So we've grown pretty quickly. We have an attractive product, which I think is step number one for growth.
What's the TVL? How much TVL do you have?
1.5 million.
Cool.
And to
So
start,
just point clear, this isn't, we're not public yet. This is just all beta right now.
Yeah. We're talking about live on the show, but this is not out there yet. You're getting all the alpha if you're listening to this.
Yeah,
so,
correct.
Very cool. Can I test it out?
Yes.
Sure.
Yeah. All right, let's do it. I only have like $22. I think like a very small amount of SOL, like $22. But maybe let's see what we got. So I hit launch.
Let's go. Yeah.
Did you guys see this?
Yeah.
So I'm gonna launch the app.
Seen it yet?
Can you can't see it? Or maybe it's because you're on your phone.
Oh yeah.
But Steve, can you see it? Is it
on
recording?
one of us?
I just want to clear that it's getting captured, right? So I'm gonna connect my Phantom. I probably can't see that happening off screen. Terms of service. I accept. I read it all. Trust me. Okay, so I can stake. I've got options here. I can get USDv, Solana's native stablecoin with real yield, or I can stake and I can lock to boost. So staking is staking my
Your USDv.
My USDv.
Yeah.
So first I gotta buy it. Let's do this. Can I swap for SOL? See, I got this MIC token in my wallet. I have no idea. Like, got airdropped to me, and I really feel like if I sell it, I'm gonna get rugged.
Yeah, don't even touch it. Yeah.
Let's buy $10. Wait,
Wow,
what's happening?
that's 10 Sol.
That's 10 Sol. That's 10 Sol. Well, yeah, .01. That's $2. See, my math is terrible. 0.04. Let's go. Okay, I don't have 10 Sol in my wallet right now, so let's just buy it with the .04. Can you guys still hear me?
Yeah.
Swap. And this is just using Jupiter on the back end? Yeah.
Yeah, it's just a router.
Booyah!
Nice.
I've got USDv.
Awesome.
All right. Now I've got USDv, which is it already earning yield, or do I have to stake to earn? I have to stake to earn.
Yeah.
Because you talked about, Rhonda, you talked about the options, right? Like there are like different ways you get, so you guys have said, if you stake, you get 21% APY.
Correct. Yeah.
All right, let's stake. Max
Max it out.
Max stake. Stake and earn. I might have to do this in bigger amount later. Success. Cool. And then I can unstake it, which takes 7 days. Okay. So you guys, so walk me through that. Why are we taking 7 days to unstake?
So there's a cooldown period that we've implemented to prevent people from abusing sort of the yield distribution. And it's also just to stabilize ourselves, give us some buffer for large amounts of unstaking and staking that can occur. It gives us some room to keep things stable.
Yeah, that makes sense. I mean, I've seen protocols implement similar things in the past. So let's go to let's see what happens when I want to lock to boost points.
And some bridging protocols as well to help bridge some funds from other DeFi tools across Ethereum and layer 2s into Solana specifically. So a bunch of exciting things coming up, but that's the long-winded answer is it's done in phases, and ultimately at the end of the day, we want to grow our users and our TVL and integrate as much as possible within the Solana DeFi ecosystem.
Well, I love the ethos. You guys are builders, you're self-funded, you're building and shipping and not asking for a bunch of money or doing, you know what I mean? Like, I think there's a lot of pride to take in that, and a lot of focus that's required to get to where you are. Like, you actually have a product. We tested it on the show and it worked. I'm going to go back and see how much yield I'm generating for our $10.
You can retire by the end of the year.
Yeah, exactly.
The show might not actually go live. Alex is retired.
Yeah, I wanted to just...
No, I'll ship it anyway.
To what Steven said, there was one big piece that we didn't really get to cover. So from an end user perspective, it's all about the yield, right? Like, how much yield can I earn? But there's a big part of this that allows us to create the network effect, the feedback loops necessary in order for our product to succeed. And that has to do with this big... So when you think about Solana right now, and you think about sort of how meme tokens evolve across the ecosystem. So like meme tokens launch, usually they pair with Solana, right? Like you've got, they paired up, they maybe last a few hours, if so. But some of them, the ones that succeed, sort of graduate and then become, take up a big portion of like a swap pool or an LP pool, right? And eventually they transition into actually having a pairing with a stable token. And so when you see tokens like Trump or Melania, they have, a few million in USDC in this LP pool. And I think one of the things that people really haven't addressed is that there's a lot of idle capital sitting in these swap pools that's not doing anything. And one of our big value props is that we're going to introduce something called a yield hook for these LP pools. So for example, let's say Trump token that has 6 million or something sitting in that yield in this LP pool, the LP holder can come into our protocol and stake their LP token, or a mechanism by which they can say, "Hey, I'm an LP and I'm participating here." We can actually stream.
Yeah, that I have USDv, and then I pair it with Sol or whatever. Pick a token. I give LP token back. Yeah, and then I can stake that with you guys, and then I get streamed revenue from you.
Exactly. So this is going to be huge,
depending on what I want.
Yeah, but at base level, I mean, so it's a whole nother mechanism for you to earn yield besides just LP fees or swap fees. So that's going to be a
Bring
huge
me
thing.
back to the yield farming days. Before I came to Solana. We like the last time I did this was on the Anchor Exchange.
Okay, nice.
Which was during the pandemic. It was really funny. And yeah, you would put in a pair on a pool, and then you get the LP token and stake the LP token and earn Pangolin tokens. And that was fun for a while.
Similar mechanic, but much more sustainable. We're talking about long-term sustainable yields here. So anyway, I did want to mention that. And so if anyone's listening to this, they happen to be someone who's planning on deploying a token, come talk to us. We want to deploy. We want to be a quote pair for you. It's really, I mean, it's strictly better than USDC or USDT because you get to earn yield on top, and your users will still get to be able to swap using stablecoin.
Interesting for digital asset treasury companies, right? Or the other one I'm really excited about is equities and commodities, like RWAs coming on chain, because these are the kinds of unlocks that I think from a regulatory perspective are not available to us quite yet, but they are going to be in like
it's the next step.
Months, 3, and so you can start participating, LPing in pools, and then getting extra, and then you have products like USDv where, as I could be a public company and hold my own equity and put it in a pool with a pair of Sol or MSOL or USDv, and I guess it has to be USDv. So I could put my equity in a USDv, my equity token pool, and then double leverage up. I get fees from that pool, but I also from my LP token, I'm earning revenue.
Exactly.
Like revenue from trading fees and revenue from stablecoin fees. And
just from providing liquidity. I mean, you saw in that example when you used Solomon, you had Sol that you swapped for USDv. It didn't matter what you had. Like we have a USDC, USDv pool right now, and that's the pool that Jupiter routed you to. But it didn't matter as an end user. You just had an SPL tokens, and you just swapped to the most efficient way possible. And as an LPer, it really doesn't matter if you're using your token with a Sol LP or a wrapped Sol or USDC. You can use USDv and get a new stream of revenue.
Very cool. Well, look, guys, we're definitely bumping up against the top of the show. I appreciate your time. Very excited for you guys. Let's definitely get you back on in like 6 months and do a check-in, where you're at. I would love to have you back and see how you've done. I love teams like yours who are building from the ground up, just bootstrapped and doing something innovative. And it is the ethos of Solana, right? Like the best teams are building things the way you guys are. Product first, get it to market, and just doing the thing it's like you can just do stuff. You can do things and be successful. So yeah, thanks again for being on the show. I appreciate your time.
It's been a pleasure, Alex.
Thanks for having us.